Good morning, all. Greg here from MasterTrader. So the big jobs report is out, and market came in a little bit, as you can see here on the 30-minute chart. It'll drop to the downside. So what does that mean in the bigger picture? Well, absolutely nothing. Trend is still up on the daily. However, the daily chart here, as you can see from the V bottom turn there after the fake news, if you will, on the Trump presidency and all that BS, straight up, clears the high, little consolidation, bottoming tail, correction bar, and straight back up again. So it's going vertical at this point, and vertical is not sustainable for very long. That doesn't mean that it ends today or next week on Monday. The thing is to continue to update the information. So now that prices have made a new high here, as you can see from prior video, now we've updated the new major support level. Where breaking below that level would violate the trend. Now, the way I do it here, and I've done it for years, and I've taught thousands to do it, is we just follow the trend of, in an uptrend, higher highs and higher lows. There's no need for trend lines and fib lines and so on. I mean, if it doesn't meet the definition of higher highs and higher lows, making a lower low, it's not in an uptrend. At that point, where do we go from there? Well, where's the next reference point of support? What does the weekly time frame tell you? So we use multiple time frame analysis. We use different reference points and the next reference point, in this case on the daily chart. So the concern here, if there is one, about the trend is the fact that it is going vertical. And when it does that, if it continues to do that, it becomes climactic, and then the retracement lower tends to be larger, but it doesn't break the trend until it breaks below the prior low. So as this goes up, it can form the next higher low and then move up, and then it could break the trend. So we continue to update that as it happens. Let's look at the Qs. And you can see, straight up, it broke this little low here. Not really a pivot or a swing low, because it's only got one higher low to the side, so it's relatively insignificant. However, this one was a swing low, and it broke that. So then this came down real hard. We were looking for further downside. It didn't happen. V bottom and straight back up. I mean, this was on news, and believe me, over the decades I've been doing this, you don't see this too often, where you get a big wide range red bar like that to the downside, and it reverses immediately and rips right back to the upside. So new things happen in the market all the time. Now, so here was the reaction to the jobs report on the NASDAQ, and let's just spread it out a little bit. Pop down, right back up again, like, okay, who cares? Market's going up. Buyers have not lost control yet. Sure look that way here. And, this may be just continuing to go up here, and at some point it's going to correct. There's no doubt about that. It always happens. But you can see even the weekly chart here on the Qs here, when it broke out here, no big deal. It's coming out of a base. Now consolidated, built up new support, up again. Now, maybe it's headed towards 6,000. I mean, it seems like the next logical number. We'll see. No next big whole number. But, the markets are holding up really, really well. So, we say it is what it is. It seems, and it seemed that way for some time, that the market should correct already, or more so, but it's not doing that. And when things have gone up this way in the past, it just eventually it just means a longer correction, and that correction could be sideways, or it could come down real hard. But whatever's going to happen is going to happen. We're going to get a big gap up or a big reversal back down, and we'll see the pattern, and we'll see what's going to occur, when it actually happens. So let's take a look at oil. Coming back in again. Looks like it's heading back down to the bottom of the support level. It looked like it could have got up here to resistance when that strong rally off of the low, But so now it's trending lower. So if you're an oil trader, go with the trends. And bonds. On the jobs report, bonds back up, and which wasn't a great report. And so now we got bond prices going up. That means yields are coming down, which we could look at TBT. If I can type it right, TBT, yields coming down. So generally that's not a good sign for the market. Meaning, prices of the market go up on anticipation of growing economy, and if you look about fundamentals, these companies are making more money, and this is all great. And with that being happening, interest rates go up because the economy expands. There's a greater demand for money, so interest rates go up. Well, interest rates are going down. So the demand for money is not there. So something is out of sync here. So these warnings, if you will, which we had also in the transportation index. Transportation index was underperforming. Interest rates are going down. Concern for the market. Well, now the transportation index has turned around off of the 200 MA and is right back up to the prior high, where, in all likelihood, it's going to stall up there. It's trading 167. It's up a little bit right under that low. But this pattern has repaired this damage, so to speak. So conflicting messages. Keeping it simple, the trend is up in the S&P and the Nasdaq. The transports have come back. Yes, bond yields are an issue, but watch what you're trading. Stick with the trends, and have your stops in, and everything will be just fine. Nice gap up today. I haven't checked the news. Obviously, it must be good. Lulu trading up here just above 56 to 57. That's a nice gap up, clearing this area right here. This could be a nice gap play, to take it higher first thing in the morning. All right, everybody, have a great Friday. Have a great weekend, and we will talk next week.